What's up, good people? How you doing? Hey, good morning, good morning, good morning. How is everybody? How's the family doing? I hope you guys slept well. We ready for this CPI data this morning? We ready for this inflation data this morning? Make sure, as we can see, we got 3 minutes until countdown. The final countdown. Good morning. Who we got this morning? Hey, good morning. Sade. Good morning. All right, from Ohio. Good morning. Good morning. I got to get a good morning song that don't get flagged. Good morning. Hey, good morning. Good morning. What's up, good people? ¿Qué pasa? Good morning. Good morning. We got a few minutes until CPI. We know how this thing goes. Man, if you guys been keeping your eye on Palantir been packing it in. Palantir just reported their first earnings ever. Not their first earnings, but they actually made money for the first time ever. Wow. Well, and a lot of people are going to pile in. It's up. It went up last night and it's going up right now. On situations like this, a lot of people are going to pile in. It'll go up, then it'll cool off a little bit. It always happens. Hey, good morning. Old fart. Okay, Angel. Angel, come on. Where's the love? Good morning. All right. Good morning. Hey, 500-ish. Waiting for this. Hey, I'm waiting to be with you guys. Jamaica. Hey, I got to get to Jamaica, man. I got to get there and set up a meet and greet, man. When things lighten up, I'm so busy. I just got to make some time to travel to come see the family. Hey, good morning. Hey, good morning. Somebody said, why don't I take these glasses off? Man, these are morning eyes, man. These morning eyes ain't no joke. If you want me doing like this, I only need them to read. In the morning, things get a little blurry, you know. I didn't start wearing reading glasses until about 2 years ago. Texas, all right. The dial was ticking up. We know how this goes. We've been here before. We know how this story ends. It's going to be a roller coaster ride, good people. It's not going to go straight up, straight down. It's going to be volatile. After the CPI data comes out, the market needs time to decipher what it just heard, rather. All right. Let's listen a little bit.
Right here on CNBC. We're just a few seconds away from that January CPI inflation number. You're looking right now at the futures, and ahead of this, you're seeing a little bit of optimism. Yesterday was a very strong day for the markets, and we're carrying through with the futures this morning. Dow right now up by about 97 points. S&P futures up by 13. The NASDAQ up by close to 50. The 10-year yield has been picking up over the last couple of weeks. If you check things out right now, especially over the last week or so, you'll see that the 10-year is yielding 3.679%, so getting back towards 3.7. Let's get it over to Rick Santelli. Rick.
Yes, the January read on the Consumer Price Index headline number expected to be up 0.5% delivers exactly that, up 0.5%. And we know that minus 0.1 originally released for December was modified a week ago with benchmark revisions up 0.2 up 0.1%. So this was as expected. Now we strip out the all-important food and energy, also up exactly the expected amount of up 0.4. Now the big numbers. CPI year over year. And this number has been going down. It is 6.4%, 6.4%. This follows 5.7, and it is the fourth number in a row in this series to move lower. And if we look at the year-over-year core, we're expecting 5.5. It is higher at 5.6. But is sequentially lower than the 5.7 in the rearview mirror, extending the run of seven from the Excuse me. On the core, this is 4 in a row at 5.6. 6.4 headline is 7 in a row, down from 9.1%. That was in June, and that was the 4-decade high. Now, here's the fly in the ointment why rates are going up. Even though the year-over-year numbers are each 1/10 lower than the rearview mirror, they are both a little higher than expectations. 6.4 was expected to be 6.2. 5.6 was expected to be 5.5. And here's the rub, okay? If you take X food and energy and then X shelter, that's now known as the super core. Now, I can't dig down into the data that deep, but many are doing that as we speak, because shelter last look in December, when we were up year over year 5.7%, was over 50% of that number. So super core is important because all of a sudden the Federal Reserve is very concerned about what's going on only with the core service sector. And that's what's left in the super core when you take out food, energy, and shelter. So rates have moved up, but not that much. We're at 370. We were right at 366, 367 pre-number. The pre-Dow futures are hovering just about at the same spot. And remember, if they go much over 34,407 in their close, that would be the highest number going all the way back to January 17th on an intraday basis. So this number might be higher than expectations on year over year, but it's behaved on actual numbers, and the markets seem to be taking it in stride. Now, back to the panel.
All right, Rick, thank you. And stay with us. We want to bring in a few more voices on this, too. Our senior economics reporter, Steve Leisman. Netta Issa, who is former Deputy Assistant Treasury Secretary under George W. Bush and Associate Professor at Georgetown. And Jason Furman, who is a Harvard professor and former chairman of the White House Council of Economic Advisors under President Obama. Steve, we will go to you first to kind of dig this through. Rick's right.
Let's listen for a few minutes.
This is a very important number. Kind of took a look at it and came back to where we...
You guys see the Dow, the indices are heading up, as you could see. Dow up 216, S&P 31, NASDAQ 120.
Oh, now we've got to move the other way. Yeah, you get this bounce around. I'm going to say Rick is right on that. There was a moment there where they tightened up a bit on the Fed funds futures, but now they've loosened up. I'll come back to that in a second. I think the story here is energy giveth and energy taketh away. We were up again 2% on energy. So a lot of the decline in the headline that we've had has been energy related. Food once again up 0.5%. We did get some help, which was sort of unexpected, from used car prices down 1.9%. But a key here is that shelter or housing up 0.7%. We can't get a break in terms of getting what we think are some of the indicators outside of the CPI showing housing and shelter going down. It's not yet filtered into the index. When it happens, that will help. And this all sort of underscores this idea, which has been coming from the Fed, that the road to disinflation is going to be a bumpy one. And just one other thing, if I read this correctly, workers did get a raise, 0.7% rise in real earnings for January. And that's a reason why we've had some people rethinking the weakness of the consumer in January after 2 bad months last year, Becky. So still an issue as to whether or not growth is going to cool quite as much as had been expected, especially with people getting a real raise when you look at the difference between what the wage they got nominally and the inflation that's taken away. Becky?
Hey, Netta, let's talk this through a little bit. I think Joe nailed it when he said this is a situation where the market looks at it and says...
All right. What's up, good people? There we go. All right, so we had CPI 0.5 versus 0.4. So a little high. Year over year, of course, that's quarter over quarter. We got month over month, rather. 0.5 versus 0.4, right? Month over month. Year over year, 0.4 versus 0.3. So we expected 0.3. We came out a little high year over year, okay? And CPI core was 6.4 versus 5.5. Food and energy and used cars are down. We had shelter and housing still high. And then we had raises that went up. So employers are paying giving more raises. So that's the data that we have. Feel free to go back and rewind and see what's going on. As we could see, the Dow ran up. It went down during the initial announcement, which is normal, and it ran up higher. Now it's kind of coming back down, cooling off. And we're going to see what the rest of the day tells and shows us. Remember, we don't just go and take this data and run. We don't take this data and make our moves, TQQs or SQ, playing the Qs is very, very, very dangerous. As you can see, the Dow was yo-yoing. Now it's 132, right? And so we don't actually sell our positions is what I meant to say, based on the direction of the market, because we don't know what the direction is going to be. A while back, as you can see, the Dow is going down now. A while back, I would be into, let's say, an SQQQ, expecting it to go down. Market turns around and goes up, and then I panic, sell for a loss. Then it turns around and goes back down. So these are the type of days where you want to exercise patience in your trading and see what the day is going to be. And if you have it timed out, we don't know, because CPI, for a while it was usually coming on a Wednesday. Now it's Tuesday. It's early. So we got the rest of the week to see what's going to happen. So I hope you have your stop losses engaged. As you can see, the Dow is cooling off now, heading south. But it does not mean anything intraday. I always say check it in the afternoon. New York afternoon is 12 o'clock. Midwest is about 11 o'clock. And then towards closing bell, because that is when the information is being dissected by the market. Look at the Dow now. See that? 21. We were up 200. Now it's going down to zero. Well, flat. Okay. But that does not mean that's going to be how the day ends at all. As a matter of fact, it could turn around and be up by hundreds of points. Now, here we go. Look at that. Right. And so that's what I mean by not rushing or not panicking. OK, so when the bell opens, when opening bell happens, don't be in a rush to sell out at a loss or whatever. I hope you guys have your stop losses set. You always set them when you put your trade in, right? Not the morning of. OK, so remember, we stress that stop loss, stop loss, stop loss. It doesn't work 100%, but it's just an extra layer of protections. OK, right. If you're long, you're good. What she means by long is if this is a long-term investment, you're good. OK, short Carvana. Yeah, I wouldn't touch Carvana, man. We have one around here in the area. So let's look at all of the rate hikes. Look at that. We had 25, 50, 75, 75, 75, 75, 50, 25. All of the rate hikes we have had. And we have never had 275 basis points rate hikes in a row. We've never had that. And we've just come off of 4 in 2022. It is crazy. Let's listen a little bit.
High of the session today, the high of the session from an intraday basis was the highest that contract traded for all of 2023. And I'm sorry, if I'm going to make a bet on the back half or end of this year as to what position I want in the marketplace, I don't know that I would put all of my chips on economists and the soothsayers of the future. I think I'll go with the markets. They will continually update as information becomes available. And
Rick,
I'm sorry.
Can we talk about that sequential decline in inflation?
Else, there's no money left. People trade to make money.
Can we talk about that sequential decline in inflation?
Yeah, Jason, make your point, and then we'll go to Steve.
Yeah, look, we had an inflation rate of 9%. It's come down to 6.4. 6.4 is incredibly high. No one ever thought that 9% was going to last. The Fed doesn't look at the 12-month moving average.
You know what? The
They're
Fed
looking at what's going on in the month, and what's going on in the month has picked up.
They did. They were wrong. They said it would last. They were wrong.
No one
then,
thought
and
inflation was
they're
going to stay at
most likely
9%.
gonna be wrong now. You know what? They said that inflation would be super sticky, and they were wrong. And they said it would be transient.
No one predicted 9% inflation.
They're just wrong with respect to how long of a period of time. Listen, Jason, why would I put my money on you versus the market? Give me one good reason why I would do that.
If all I'm here to do is recite what the market thinks, it's not that useful. So I'm making my input. Maybe it's useful, maybe it's not.
Oh, it is useful.
You, Rick, can decide to ignore it. But I just tell you, I think 6% inflation is a lot higher than most of us thought it would be at this point in time.
It's
that it's come down
high,
from 9.
but it's not
doesn't come through.
9.1. And in 6 months, it'll be lower than that. It
probably will be lower than 6.4. I agree with that, too. It just won't be 2.
You're all
I don't think it's
missing
going to
the
be 2 6
reality
months
here,
from now.
guys.
I never said it would be 2.
These guys are always going at it, man. Hey, Andrew Johnson. What's up, fam? Is that your daughter? Andrew, is that your daughter? That's cool. Hey, make sure you tell her happy Valentine's Day, right? Yeah, these guys are always going at it. Yup. He's done. What did you say? He's done talking. Thanks, fam. Yup. Owned. All right, coffee cups. Oh man, this is crazy. So the Dow is fighting back. It's fighting back. We're in positive territory again. Yeah, still bad. Yeah, that's right. That's true. Luke, that's true. It does tell the market that we're a long ways off of rate cuts. Here's the only way he's going to go. Let's listen to what they're arguing about.
The price of the NASDAQ, the price of the Dow, and interest rates. That's what I'm talking about.
I don't do stocks. I think
obviously, what economists see at this point, what some of the investors see at this point are two different things, and we watch that play out in the markets every day. You can even watch it between the equities futures and what you're seeing with Treasury prices, too.
I just
I'm also
think,
talking
Becky,
what
that
the
if
market
you want to know what the market thinks about.
That's true. Economists see one thing and investors see another. Investors see a bull market and economists see a bear market.
We're going into recession and they're cutting rates at the end of the year. We could easily have a Fed funds rate of 6% at the end of the year because they have to raise every meeting to get rid of this inflation.
Jason, love you to death, but the cut story is gone. That's yesterday's news. And by the way, if you look at the 5-year forwards, those have been going up near 230, 240. So the market has been baking in more inflation. So look, I cannot look to the stock market for the stock market's view on either the Fed or rates because it's not as clear a picture as when I look at the Fed funds futures or at the interest rate complex. That's where I look for my clue for what the market thinks about the Fed. And right now, there's very good alignment.
Okay, I want to get a quick comment from Netta. Netta, how long of a lag delay do you think there will be for all the rate hikes that the Fed has already put in place? I guess.
Good question.
People worry about, is there going to be this huge wall that we hit at some point because of what's already been done?
So my view is we have done the easy part. It's from now until the 2% target, if we're still aiming for that, it's going to take quite a bit more. So I'm with Jason on this one. I think we have not seen, after nearly a year of rate increases, much of a slowdown in the job market. Without that, I don't see how we get down to anywhere near the 2% inflation. So I think there is a lag, but I don't see that it's going to get us that much further.
So I agree with her. We've had all of those. We've had 225. We've had 225s, 250s, and 475s. And inflation is still hot. Inflation is still hot. So it's going to take a longer time for us to get to 2%. And either the market is going to trade sideways, meaning the stock market is in its entirety will be range bound, right? Which is good for day traders, is good for swing traders, and it's good for a dollar cost averaging. All right. So the S&P, the entire stock market will just be range bound. That's what we mean by trading sideways. OK, before it actually goes up or go down. So you'll see down, up in a specific range. And so that's what I think is going to happen pretty much for the rest of the year if the Fed continues on the path that he is. Now, if the Fed goes more aggressive in his interest rate hikes, if he sees this and say, everything we've done has not been enough, I need to increase, and he starts back up with 50 basis points, then we could be forced into a for sure deeper recession. Follow? Then if that happens and he says we're going to go another 50 and it really slams the market, coupled with weaker forward guidance or weaker earnings. Remember, I'm waiting to see what Q1 of this year, 2023 earnings are, which we should be getting in around April. Those two things could cause us to go into a deeper recession. If that does happen, there is a slim chance that the Fed may do a U-turn by the end of the year. But that's very slim. So everything is predicated on everything else. It's like a house of blocks, really. This triggers this triggers that. It's like those rat traps that has all of these components in there. One triggers the other. Right. So now, Larry, which one is going to happen? Nobody knows, not even the Fed. So that's why we're going to trade the market we're in. We're going to see what the market does with this information, how it digests it, and then we're going to make our decisions based on that, right? So I did do a little of the Qs. I said I wasn't, but at the last minute, it wasn't much though. It's nothing to talk about. I actually did an hedge. I did some T's and I did some S's. So, but it's not enough to even talk about. So I'm probably just flat even. Okay. All right. Hey. Of course, it doesn't take some time. Yes. Fed doesn't care about the market. I wouldn't say that. I used to say that, Fed is the bad guy. The Fed is the bad guy. Fed is the bad guy. But let's be for real. What happens if Fed Jerome Powell pulls this off and the Fed board pulls this off and they fly under that thin margin of landing the plane safely? Let's say they do that. Then is he still a bad guy or is he a good guy? I wouldn't want his job. Someone has to do it, right? His job is not about the market. You're correct on that. His job is not to get the stock market right. His job is to get control of inflation. His job is to take care of the economy. That's his job. And if the stock market has to be a short-term sacrificial lamb, then he has to do that. But remember this, his number one job now is to get employment down. And as you can see, raises are going up. And the reason why we haven't fallen into a deeper recession is because of jobs. Jobs are still strong and jobs are holding the market up. There is indices, there is sectors that are going through a recession right now. The housing industry is going through a recession right now. Some of us are going through a personal recession right now. The stock market is going through a recession right now and could be going through a deeper recession. But jobs is like, nah, I'm good. And so that's what's happening. Okay. And we could have what's called a rolling where it just does sector by sector instead of everything at once. And that will cause the stock market to trade sideways. All right. All righty. Okay. So, hey, GoRo. GoRo is gold. Let me say this. GoRo is gold, and not just GoRo, just all gold and energy. What is a hedge against inflation? Healthcare, gold, energy, If the market is doing well, those are not. So just remember that. Remember, I don't personally go in heavy on any of these, right? I don't go in heavy because they do well. They're a hedge against inflation. When I do get something like gold, I hold it for a long time if I think a deeper recession is coming. So remember when I brought up gold roll, I was saying, hey, let's see what's happening.
Senators expected to get a briefing today on the high altitude objects. That's what
I'm sick of the balloon stuff right now. So gold, because the market is doing so well, as you can see, the Dow is back up 100 points. Because the market is strong, gold will be weak. Okay, when the market goes down, whenever that is, and it will eventually go down, then gold will come up. And so will energy. Energy has not performed. When energy hit when gas hit $130 a barrel, that's when I sold because it was high. I did not know that was going to be the top. I'm not that smart. It was just a lucky guess. That's a lesson for us to take profits, take profits, take profits. A lot of new investors are trying to sell at the top and buy at the bottom. Good luck on that because you're going to miss. Limit your margins. If you think the top is here, then sell here. If you think the bottom is here, then buy here. And so if you do that more times, you're going to make more money over a period of time. All right, let's get the last one here. We're 26 minutes. I can't even post that. Good morning. Crypto has been cooling off here lately, as we know. Let me take a look at crypto. Crypto has been cooling off. In some ways, I believe that crypto is ahead of the stock market. You know how the stock market is forward looking. So all the reaction that you see from the stock market right now, it is looking forward. Crypto is doing okay. Crypto is doing okay. Yep. Take profits. Take profits. Yeah. And then that's right. GoRo stopped their dividend payments. You're right. Thanks for bringing that up, fam. And that's one of the reasons why they tanked. A lot of these companies, most companies, either reduce dividend payments or stop dividend payments. And it's only temporary, right? Sometimes. So because they got beat down so much, and some of the biggest tech companies, some of the biggest companies in the world that give dividends, it's not the same. Sometimes they reduce their dividends or they'll pause their dividends if they're not bringing in revenue. That's actually not a bad thing for a stockholder because you want the company to operate good. If you look at over the last month, you will see tens of thousands of jobs laid off, right? Every single time, just Google what big company is laying off and you'll see a stock that went up. Every time a company announces that they're laying off, their stock goes up because it shows that they're trying to operate leaner and work for you, the shareholder. So check that out. Okay. Give me one more. Matic is still my top dog right now. Matic is my top dog with crypto. It just is right now. I know I'm not like anybody else. Matic is my top dog. What else we got? Hey, I answered that one. Right, we got to keep an eye on the US dollar at all times. We got to keep an eye on the US dollar. If actually the US dollar, when it shows that it's weakening, the stock market goes up. I don't know when Mumu is coming to Europe. It's based on Europe, so they have to file for these different countries, and the different countries drag their feet on these. Okay, for those of you that don't have Mumu, it is the top link. Deposit $100. I showed you guys where it gives you all this free. It shows what stock are paying dividends, right? So, and it shows the top dividend paying stocks. That's on the Mumu app. So that'll be the top one. Baidu. I didn't get back in Baidu. I ride Baidu like a roller coaster. I mean, I didn't get back in right now because of the China American tension going on right now. And I talked about on yesterday the Chinese company that Ford Motor is going to have manufacturing their batteries that don't require nickel. Now, I would be very careful. As you can see, I went to Ford. I will invest in Ford. But as you could see, during these times of tension, I would just be careful in investing in that company. But I do invest in Ford. I buy Ford daily, Ford and GM, as you guys know. That's part. Those are my $5 a day. Those are some of my. I'm buying that every week. As far as my EVs go. Now, just remember, those of you that's watching me on a iPhone, just remember, Google where those are manufactured. Okay, let's just keep it real, right? Look at Tesla. If Tesla didn't have a relationship with China, Tesla stock would be. Just look at it. Just keep all things. And I know, some people are like, it's a communist country. It's a communist country. It is true. It is a communist country. I agree with you. But we're so intertwined till they're going to do everything they can not to be at odds, because we do imports and exports. That's just the way it is, right? Look around your house and see how much would be affected. Okay. All right. So somebody said something to me and they was watching me on the iPhone. I'm like, what do you think that's manufactured, bro? Okay. That's a great question. Why are people scared of recession as the market recovers? Dollars gone. We already been in a recession. And, somebody said, man, Larry's talking like he wish a recession would come. Man, I just want the Band-Aid to be ripped off. I just want us to show some consistent signs of a bottom so we can at least trade sideways and not have a deeper floor or start to steady go up. I don't even need a bull market right now. I just need a steady climb up before the bull market, right? And so if we do go into where the market is trading sideways, just think of it as crypto being in the accumulation phase. So we will be accumulating in crypto and stock. That would be good. Yep. Right. Right. Let's rip the Band-Aid off. Yep. Morning, Rick. How you doing, Rick? Slick Rick. Remember that song, Slick Rick? Yep. Yeah. The report is late. Yeah, actually, if you're saying, you said rest in peace, Band-Aid. So if you're saying that the CPI is late, you're right. It's old news. It really is. It really is old news. That's why I'm waiting on Q1. So we're looking backwards. And remember, the market is looking forward. Always keep that in mind. So we don't know what real-time data is telling us. Good point. Great point. Yep. New York City in the house. Wow. Wow. That's right, sexy crypto. That's ooh, it's morning time. I didn't look at that. Yep. Hey, good morning, Joe. Good morning, Joe. Right, Slick Rick. Slick Rick. All right, good morning, good people. Hey, I'm going to leave it right there. Hey, remember to download the top. My wife was saying, you should have some flowers. And she was right, before the CPI numbers come out. CPI loves me. CPI loves me not. CPI loves me. Yeah, I should have did that. All right, good people, we're going to leave it right there. Hey, remember to download Moo. It will show you a lot of information. It does show you the earnings coming up for the year, gives you the earnings report, gives you the pre-markets. You're able to trade hours before the market opens and hours after it closes. Deposit $100, get it funded today. We will see you guys later. It is really good kicking it with you guys in the mornings. Right. What up, family? Mr. Taylor, you see I'm doing like this. I can see clear, like I can see clear this way, but when I look at this computer, I'm like, man, right, fam, right. So, all right, New Orleans in the house. Hey, we're gonna see you later on today. Live, love, laugh, learn, and earn. Hey, make sure you guys share me with your family and friends, okay? Make sure you share my page with your family and friends. Let's get those likes up, okay? And we will see you later on today. I'm going to continue bringing you guys the best that I can. All right? Peace.